afternoon. This is Mr. Not Advice. It's Wednesday, July 21st, 2026. As always, this is for education and entertainment purposes only. This is my end of the day update. So the great rotation and broadening out of was put on pause today as traders aggressively bought back into semis and momentum stocks. That was a record momentum melt up today ahead of a big earnings release tomorrow after the market, which is Google. Gold, Bitcoin, and oil all rallied notably despite the fact that, of course, the attacks continue to escalate and are spreading regionally. Mentioned yesterday, I'll be looking for one data point before I gain confidence that I can go back into the market. And that will be at least a 3 day ceasefire of shooting, which right now there doesn't seem to be any apparent motivation by Trump to do so. Supposedly, Iran has been reaching out, wants to talk. They always want to talk, and Trump says no. So we had equities were up. They decoupled from bonds and oil today. Oil is 10 straight days of ongoing military activity in the Middle East, and Brent crude futures closed back above $90 today, which traders are pointing to as the Maginot Line. The last time oil was above 90 was on June 11th, and that was a week before the US and Iran signed the first memo of understanding. As I said, today was another thinly traded market, and the broadening out trade of the rally was put on pause with the markets led higher by AI favorite semis and a big bounce in momentum. And that completely ignored the 50% tariff, 50, that Trump announced on Canada. Given the biggest gainers, it's really not surprising that the NASDAQ led the US majors higher with a short squeeze going on in small caps. Unlike yesterday's rally that got given back at the end of the day, zero DTE traders supported the rally all day. The Dow was the laggard, but all US majors ended green on the day. Breadth was thin with the S&P XAI flat right here, while AI leaders led the way. Goldman's desk noted that exchange volumes remained light, with activity levels a 3 out of 10 on the desk, with the floor skewed 6% better to buy. Long onlys were selling today with supply in communication services, materials, and consumer discretionary versus buying in infotech and energy. Hedge funds were skewed 3% better to buy with demand in infotech, consumer discretionary versus selling in consumer staples and macro products. On the back of that activity, semi soared over 5% today, the best day in 6 weeks. A lot of that is probably due to the fact that recent drawdown was too deep, too fast, but that is a symptom of the overall volatility of the market. However, semis still remain below the 50-day moving average, which is my level as an all clear. Bloomberg's Michael Bell was a little more cautious as he said that put demand remains elevated across semiconductor ETFs as well as former AI winners, while negative gamma in the NASDAQ and semi ETFs are forcing dealers to chase moves rather than suppress moves. Remember, tomorrow after the close, Google will be reporting earnings, and the market will look to see that their CapEx spending is on track. The US dollar was strong today, nearing this channel breakout to the top side as it traded to the upper end of its recent post war spike downtrend, partly, in fact, to oil prices dragging yields higher. The yen, once again, back to 163 versus the US dollar, which is reigniting chatter about Japanese bank intervention. Once again, gold was able to rally back up to 40.80, which is counterintuitive because the dollar was also strong today. In addition, Bitcoin ETF inflows continue to build again as Bitcoin rallies up to 67,000 before fading a little bit. Michael Romano, head of hedge fund equity derivative sales at UBS, echoed Goldman's optimism about buying the recent dip, saying that improving AI fundamentals are a signal to buy the dip. He advised investors to gradually enter into positions, stating that scaling into a position is prudent. He expects the momentum unwind to bottom by the end of July, stating that he expects a liquidity bubble to the upside when things turn. Overall, lots of green in the market today. EOSE trading today. This is my weekly chart, by the way. EOSE trading today, still an inside day from Monday's drop and then close at about the 50% level. This morning was frustrating as I tried to get into an ONDS trade. Calls September, I had put in an order at 117 for these September 7s. The minute I put it in, the second I put it in, price went to 120 and then started running. I did not get filled. It's very frustrating for me when I do most of the work and then we're not able to enter the position. This is the candle that I tried to get in on off the 5-minute chart. And as you can see, it just took off. So I wasn't able to get in the trade. Some of the members were. So hats off to you. Remember, I have a live session coming up tomorrow about covered calls, but it's not your usual covered call strategy. I'll be talking about how to repair broken covered call positions. Also, I'll be discussing how to use covered calls to create a synthetic yield against stable low beta ETFs or stocks. All in all, a decent day, but as with the overall market in the past couple months, let's take a look at the daily chart to show you how just ridiculous all of this is. You can see that every single time the market has dropped, and this was a major support level that it hit on Monday, but every single time the market has dropped and rallied, every rally is getting shallower and shallower. So will this continue? I think this is going to be all about Google tomorrow. And in fact, I did open a trade using the TQQQs, very short-term trade, lotto trade. And so we'll see how that plays out tomorrow after the close. Don't have much more to report. I hope you had a great day, and I will see you all in the boardroom.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping.